guys, what's going on? Kunal here, Bulls on Wall Street. I want to give you guys an update to our current cryptocurrency market crash. And at this point, there's no getting around it. You know, we did a video last week. I was kind of outlining what would happen if we broke under the 200 SMA on Bitcoin. We've gone through it with gusto. It's like it didn't even exist. We've got a lot of different scenarios playing out, but we are getting probably closer to the bounce spot than we would be right at the start of the move. So a couple of things to be mindful of. You know, a lot of people are kind of attributing some of this to, right, Elon Musk tweets and, you know, the China news and, you know, so on and so forth. But one thing to really just be mindful of is that, you know, Bitcoin itself has been really rolling over for months. I would say it peaked out in the beginning of April, right? It peaked out in the beginning of April. And so now we're just coming into the conclusion of that longer term pattern that's already been showing. And sure, the news doesn't help. News always comes at the worst times. And so what happens is when you get a market that's rolling over, any tinder that's thrown on the fire, it just explodes as people have tricky, itchy trigger fingers. And that's what we're having right now. You know, if you can see here, you know, really, I think this 30,000 is going to be an important level, you know, on Bitcoin on a psychological basis and on a technical basis. You can see on the technical basis, this 29 to 30,000 is a little bit of support from before, but it's also this old last low, right? And we haven't actually broke under it. A lot of the altcoins are bleeding off, but Bitcoin is still holding over that last low. So this 30,000 is going to be the area to watch. If we knife through, which we very well could, then that's going to put even some more significant sell pressure into the market, you know, where we may not have an easy bottom. But I think something to just kind of be aware of, you know, when we're looking at this is, you know, I think it's always a nice idea when you get these kind of big crashes to see where the longer term picture is on longer term time frames, which will give you a clearer idea of where the support and resistance is when you're doing a bigger picture trade. It's like when you're doing a shorter term picture trade, you're going for smaller term time frames. But when you're doing a bigger picture trade, it's important to really zoom out a little bit. So, you know, you can obviously this 20,000 is going to be really the big level. And, you know, we may get there. I mean, you never know. But I think that's probably not a high probability event. We do have that 29, 30,000 level. And then we also have the 50 SMA on the weekly chart of Bitcoin that could help hold it up. I think it's important to go to those weekly charts to see really where the longer term supports are. But one thing to just be so aware of is if you really see when you go to the weekly charts, like how much this market was up. I mean, there's not a single coin that I've seen that's not up 1,000%, 2,000%, and you know that might be a slight hyperbole, but you know you can see like a lot of this stuff, like we trade like Matic. In the beginning of the year, this was 2 pennies, right? And it got up to $2.60. Like that's, you know, that's a wild thing, right? You know, you have, you know, stuff like Link that's up, you know, 500%. And, you know, even the beginning of the year, this BNB coin was up. It was at $40, so at $700, it's over a 10x gain. You know, so we're starting to have, you know, a pullback, and it's fast and furious. The velocity of it is actually a little bit surprising. You know, having a pullback is not surprising, but the velocity of it is a little bit shocking to the core sometimes when you're watching this stuff. And I'm just all cash right now, but I think, you know, I want to start pointing out some levels that I think we need to start watching. I think a couple things here. This BNB coin's got a lot of support here at 216. Will it hold? Nobody knows. What I like to do if I'm a short-term trader, I go to 15-minute charts, and what I start looking for is some type of rounding pattern or a series of higher lows. So like you can see here, like we made a low, right? As we tested that 200 SMA, and now we popped up. Do we make a lower high and then thrust over? Or, you know, do we just keep trending down? As you can see here, we're really just fading off this 20 EMA non-stop over here. And till that pattern resolves itself, we're not going to get any short-term momentum. Now, we are on some support. We've had a 50% plus pullback, which is a nice thing to do if you're looking to potentially get long some things. it's just scary. When buying into the teeth of blood, it's very, very hard to time. If you look at here at Ethereum, you've got a lot of support here in this kind of 1600 range. I think this 200 SMA could be a really nice spot on Ethereum here. I mean, 1600, I would say 1700, somewhere in that zone, we want to start looking. Now, when you get to support, it doesn't mean you start to add. What it starts to mean is you start looking at smaller term time frames for signs and clues that a push is coming. So you want some type of rounding pattern, some type of series of higher lows, and then that's where you're going to have a really a lower risk, higher probability opportunity. But I do think like 1600 on ETH, we got BNB on the 200 SMA too. If you look at Link here, you've really knifed through on Link all supports, but you're getting into the zone over here where there should be, a little bit of stalling action in terms of a bounce. And you can see here on a weekly level, you're right at the kind of 50 SMA on the weekly, and you've got this congestion here. This was a very, very powerful pattern that erupted from there. And so those areas become key. When you look at like trying to bounce something, looking at inflection points where a coin may have taken off in the past, where there was a significant amount of buying, that can be really, really important. So if you're really like kind of looking over here, let me just brighten up this volume here a little bit. But when you're looking at some of this stuff, what you really want to be thinking is like, okay, what are these inflection points? Where did it start to push? And where can we potentially have, right, some type of action where we can protect ourselves. And I think that's going to be just really important, as we're coming into this. So just going to be mindful of these things. You can see here, let me brighten this up here. So you can see here now, when you look at this like Link, you can see there was some significant buying up at these levels over here. And that also was an inflection point where a breakout started. And so that's like, these are levels that now we want to really start watching on smaller term time frames. So I think you're getting closer to some bounce spots. I'd ideally like it to test the lower Bollinger Band. Anytime you get a break out of the top of the upper Bollinger Band, you typically get a snapback break at the top of the upper Bollinger Band, a strong one, where you get at least most of the candle out. That's where you're going to have, some nice action. And so we could get a flush through the lower Bollinger Band, which has acted as some support in the past. I think that could be pretty cool, when we're looking at some of this stuff, and that's where we really want to go. You want to start mapping out some levels and then be mindful. Now, when this bounce starts, and it'll start at some point, what we need to be doing is realizing that there's a shot that this current phase of the bull market is over. And what I mean by that is that the charts have been broken. The easiest money to make is in a trending phase. And all traders, investors, no matter your time frame, you should always be aware of that. That when you have your MAs, your moving averages sloping higher, that's the lowest risk, highest opportunity trades. When you get declining long-term moving averages like your 50 SMA, that's when your intermediate term trends are reversing. And so any bounce you take, you have to not look at it as this is the savior and I'm into this thing for the bottom. It may just be a quick flip where I think like if something like this holds, maybe it gets up to the 9 EMA, and that's kind of your probability and risk on the trade. That's all you can really expect out of it. Now, if it knifes through, that's okay. My thinking is I'll sell half into the spike. I put a stop at my buy price, and then I let it roll and see what happens. But it's very, very important to realize that the longer term pictures of Bitcoin and Ethereum have changed. Bitcoin's got a declining 50 SMA, 20 SMA, 9 EMA. See how it's just trending down the 9 EMA? Now, the 200 SMA is still flat, so its longer-term trend is evened out. It's just flat at the moment, but these are things to kind of really be mindful of. This is a big rollover pattern. Where do we get support? And then how long does the bounce last? So I'm playing for a bounce soon. I'm stalking this stuff, but I want to make sure to really reiterate that this is probably just a flip. When you get longer-term trends, they come out of big, big bases. Longer-term trends don't start from a crash, all right? Bottoms are never an event. They are a process. It's long-term bases that give a stock or a coin its power. It's the longer-term bases that create launch points. So when we have some of these, I'm also watching this quantum here, right? You got this thing was at almost $40. It's right back down to its 200 SMA over here. Like we have ourselves a really nice location, but we have to be really mindful that, see, it's these longer-term bases that create the big moves, because that flattens out your moving averages. It creates a congestion, so then when you kind of break over them and you base, you have that support underneath. When you get declining MAs, then every bounce has to be treated like it's guilty. You can't trust it. So we're going to be playing for the bounce. I like this quantum on the speculative side. I'm looking at this SOL here. So this was also a congestion point where it broke out. So somewhere from 16 to 14. I like Ethereum at near its 200 SMA. And I like BNB somewhere around here. We may knife through just a little bit. I think those are going to give you some nice bounce spots. And also this NEO, which was $140, and it's come back in to see this big congestion point over here. So it's a short watch list. I mean, you don't need to have a million things on the watch list. I would also focus more on the big boys than the penny ones, like the 15, 20, 30 cent ones, because they're going to have the liquidity to be able to get in and out, and they're still going to have the range. If you really see here, they're all moving around the same spot, right? Like 20, 25%, SOL's down 30%, but this was up, the most. If you do need a one speculative one, possibly this Matic would be the cleanest out of the group. 270 down into 80 cents, but this 80 cents, that 80 cents was a big bounce spot, right? And so when you look back, hold on here. Damn Brave browser, always got to reload it, right? Where was this thing? Hold on here. You can see here. So this was also a congestion zone. The old breakout spot was around 85 to 94 cents. So this range is about 67 to 92 cents. So I expect that would be, if it bounces, that's going to be the level to start looking at, where we say, okay, we may want to put very, very small risk. And you're also on the 50 SMA here. So I'm looking for plays where there's a confluence of supports. Multiple supports is better than just one. In a crashing market, a moving average may not mean much. It's an area to watch, but it's not like some squiggly line is going to hold up this coin. But if you can couple that with some levels of price support, some levels of psychological support and inflection points, now you can have an area where you start watching on closer term time frames. So I reiterate, the watch list would be Quantum, ETH, Link, BNB. On the speculative side, right, we've got SOL, Quantum, and possibly NEO. Short list. There's some other ones that are looking fairly interesting, but they're all running together. Like these DEXs, like maybe $8 on Uni would be really nice. If you're thinking like, even a little bit more speculative, then this cake was $42, right? Pancake swap or whatever this shit is. But you can see this was the old lows. There could be a lot of support on this one also. It is a little bit more speculative, so you just got to be careful. But I think that's where we want to start with this. We go with the big boys. I wouldn't go full size, full accounts, nothing like that. You nibble, quarter account, maybe 5% risk, meaning if you get stopped out of your plays, you lose about 5% of your account. You had 2 or 3. If you get stopped out, you lose about 5% of your account. And if you catch the bounce, good. As the bounce starts to confirm, then you start putting the hammer on. The one thing with cryptos that's different than stocks is that once it starts to really push, the FOMO kicks in and the chase is on in an elongated manner compared to individual stocks, because there's just more range in this market and also a less sophisticated type of trader. That's why cryptocurrency trading, if for the most part, is so easy, because you have a more of a retail crowd versus professional crowd, and so you get bigger range, but also it's just easier to see the levels and read the tape on these things. So guys, let me know if you have any questions. Hopefully that helps. Protect your risk. Protect your risk. I will always reiterate, the best runs come from bases, all right? The best runs come from bases. They don't come from catching crashes. This crash type of play is just a flip, a 2 or 3 day hold if it holds, and then we get out and then see what's up. So manage your risk. There's always better days ahead. Don't be a victim. You don't have to hold this stuff into the teeth of a decline. If something ever just makes you feel uncomfortable, then remove it from your eyesight, right? You don't have to be holding on to these things, but we're definitely closer to the bottom than the top, obviously, right? Because some of these things have dropped 75%. So you're closer to the bottom than the top. There's brighter days out there. Cash is a position for the most part in this industry, and you can wait for good prices. So guys, let me know if you have any questions. Take care.